Welcome to the InterMarket Analysis Update. This is being prepared Monday, July 18th. I decided to take a day off over the weekend, so I'm a little bit later posting the videos. And this will apply to Monday, July 18th, and I usually do this video once a week. All right, so let's go in first and look at the S&P 500 valuation. How are we looking right now? We're coming down, still below this PE ratio of 20. Now, this is the trailing 12 months. This is looking backwards. The market doesn't use that. It looks forward. And with the forward EPS, even though they've been coming down, if you watch some of my other videos, we are still not considered overvalued on a forward looking. And we're getting to be not as expensive when we're looking backwards at those numbers that have officially been published. So we're below the 20 PE ratio. And then this just shows how the PE ratio has behaved over time when compared to price. So I go back all the way to 1980 with all these different events that have happened. All right, so I want to go through and look at the possible positive scenarios that we're looking at right now, because this deals with intermarket analysis. We're not just looking inside the S&P, we're looking across different market indexes, where this first one is the S&P itself, where we're looking at the 200-day simple moving average coming down and giving us almost an extreme negative reading and then bouncing up off of that. And if you compare, sometimes this is marked a low or near a low in the S&P itself. Then we have a 10-day average of the highs and lows in the S&P. We went all the way down and we're bouncing back up ever so slightly right now. Here's the VIX, the 5-period moving average, where we spiked up and now we're starting to come down. So we've got a lot of positive things. Now, this is more the intermarket analysis look at things, where we're comparing the Qs with the S&P 500. Late in 2021, we saw a negative divergence. The S&P was making a higher high. The Q on a ratio basis was not making a higher high. And then we've had a lot of trouble since then. Well, we've been seeing a bullish divergence now, where the Qs, they're going up slightly and they're actually outperforming the S&P 500. And we're seeing that same basic thing with discretionary against the SPY and the growth against value. And so that's really the main thing that we're seeing now, is a rotation from value, which that's what the market gets into when we're going to have some trouble, and then back into growth, where that's what the market gets into when we want things to shoot higher. Now, this can take some time, and it's not necessarily going to happen right away. We just want to keep watching this, see if this scenario is continuing to develop, and then at some point, we should start to see things go higher. All right, then we look at the growth versus value with the large caps, mid caps, and small caps, and they're also outperforming. The growth is outperforming the value, but we're just not seeing it in price yet. We're looking at the 2-year yield, where it's spiked up and is coming back down, but we're starting to get back close to this spike again. So we don't know if this is a valid spike right now. And again, if you compare with the spike that we see down below with what would happen in the S&P 500, a lot of times that will mark a short to intermediate term top, or I'm sorry, short to intermediate term bottom, right before we get set to usually have a top in the market. The staples sector, it hasn't crashed yet, but this has really been doing well in 2020, 2021, and has been holding up in 2022. Well, we're starting to see that break down now. This is more of a defensive sector that folks get into, and we could be seeing a death cross here pretty soon. Also, we have a ratio of the staples to the S&P 500. We were looking at this spike for a long time. We came back out and kind of matched that spike. So this spike took over. Now it looks like we might be breaking above this spike. So we don't really know right now. But if you look back and see where we did have a legitimate spike, this often marked a low in the S&P. All right, growth and value. We're still seeing growth really underperform right now. And we're also seeing value really start to underperform. We've had a death cross here. We're below both of the moving averages. And this is just a value index, where this other chart is a growth index. Now we compare the two, growth versus value. Growth is starting to show a little bit of improvement here, where value is starting to break down slightly. Here's another way of looking at that. Here's a growth to value index ratio, where we're still in a downtrend when it comes to growth, but we are showing some improvement. Here's an inverse of that same chart. Value had really been outperforming, but now it could be starting to break down. Another look at this. Growth has been breaking down, but showing some improvement. Value had been really underperforming, has been outperforming, but now we're showing some weakness. So we're seeing this across multiple indexes, multiple ETFs, and multiple ratios. All right, just to look at the inflation deflation ratio, it shows that inflation is really going down currently. And this is a longer term chart. This is monthly. The CRB index, it's also showing some real weakness. This is where a lot of the inflation has been coming from. And if we really see a breakdown in the CRB, that could bode well for stocks and bonds. Then just to show you some different things, corn has really been coming down lately. Aluminum has also been really falling. Heating oil is not as high as it was. It's still very high, but not as high. Here's gas, where it really spiked up and it's been coming down. Natural gas also spiked up and has been coming down and starting to go back up slightly. Oil, it's below 100 right now. I guess that could be declared some kind of a victory. Wheat really spiked up and has been coming down. Lumber, it had been in a really solid downtrend and then was bouncing back up, and now it's continuing to go down. The dollar, that's the thing that's really been holding up the best, and especially against the Japanese yen and the euro. And even though we saw a decline on Friday, this is still in a really solid uptrend. Here's the euro showing some weakness, with the dollar showing some strength. And here's the Japanese yen, the euro, and the dollar, where the dollar's been doing better. And as I keep saying in my other videos, the dollar may go in the toilet at some point, but it's not going there right now. Copper, this is another thing we want to keep an eye on, because we're seeing copper really fall. And they call it Dr. Copper. And when copper really starts to get weaker, that looks toward weaker economic times. When the copper really starts to get stronger, that means that the economy may be picking up. Here's a ratio between copper and gold. Copper's been having trouble, gold's been having trouble. So this ratio has just been going down pretty severe, even though we saw a little bit of a bounce, but it's in a downtrend. This is that same chart showing the difference, the black line, between that and the 2-year yield spread. And it just shows that they are very far apart from each other, where they do have a tendency to move in the same direction. And when they do get far apart, they tend to do something to bring them back closer to each other. Gold has really been having trouble lately. Here's the Gold ETF and Silvers also. Even though it bounced up a bit on Friday, it's in a pretty significant downtrend right now. Our different index ratios, here's the CRB index, which has been really outperforming, but is starting to show some relative weakness. This is an inverse of that same chart. The S&P had been doing better. Then the S&P had been breaking down, but it's starting to show some improvement. And here's the Nasdaq 100, which is growth. It's not breaking out by any means, and it's still in a downtrend. We have the 200-day moving average in the 50, but it is showing some improvement. Looking at some other stocks, here's the mega cap growth stocks. These are the big monster stocks, the Apples, the Microsofts, the biggies, the Googles, the stocks that people love to talk about, where it's still in a downtrend overall, but is it starting to show some improvement? Here's S&P 100, also mainly growth, it is starting to show a lot of improvement when compared to the rest of the S&P 500. Here's small caps. We're not really seeing a breakout yet with small caps against the S&P. And this red line here, it's just showing how we're just kind of going sideways right now. Here's the low volatility stocks. These are the stocks that folks get into when the market is going to be weaker. They've been really strong through 2020, 2021. Now we've seen a death cross and they're starting to come down. So then we look at the ratio of the low volatility stocks against the S&P. It's still in an uptrend. It's still outperforming the S&P, but it could be starting to show some weakness. Then here's the Dow Jones Composite, which takes the Dow, the transports, and the utilities together. Still not really breaking out all that much, but not necessarily breaking down right now. Here is just a look at the small cap, or excuse me, large cap, mid cap, and small caps without any studies on them at all. I just like to look at these just to see, are they generally moving in the same direction? We're looking for divergences. The same is true here with the Dow theory. Here's the Dow, the transports, and the utilities. Are they moving more in the same direction? We do see a convergence between the Dow and the transports. We're seeing a little bit more strength right now with the utilities. And then here is the Amex, Nasdaq, and NYSE, all of those together. You look at their 5-period moving average of highs and lows. They gave an extreme negative reading, but they're continuing to bounce back slightly. Here are the FANG stocks, still not breaking down necessarily anymore, dealing with this moving average right here, but still in a downtrend overall. Looking at bonds, the bonds are still having a lot of trouble based on price. Could they start to bounce? Could we get to the point where we see bonds go up and stocks go up together? Because that would mean that interest rates are coming down. Here's the stock to bond ratio, where stocks have been really outperforming bonds, but lately we've been seeing some weakness. Here's bonds against the S&P, just an inverse, looking at different maturities with bonds, where bonds might be starting to break out here, but we're not seeing anything really significant yet, but we do have a golden cross right here. Then here just shows the S&P 500 to the 10-year yield. The S&P has really been underperforming the rise in interest rates. We're coming back up to this moving average. We didn't make it through before. Can we make it through this time? Here's junk bonds, which give a higher yield, and they tend to move more in the same direction as stocks, where they've been in a pretty solid downtrend. Are we starting to see some improvement? Here's a ratio between junk bonds and Treasury bonds, very safe bonds, where the junk bonds had been outperforming and they're still doing better, but we're seeing some weakness as of late. Here are the yields, just looking at across the US government yields, where they're just kind of, it's really crazy how some of the lines are going over top of each other. We have some curves that are inverted right now, and it's really been crazy. But could we start to see a top in yields and then yields coming down, and that could really give some support to stocks? Here's internationally, where the US has the highest yield, followed by the UK, then Germany, and then Japan, which is still pretty much flatlining, barely above zero. Looking at some of the sectors, the energy sector has been the place to be in 2022, but is that starting to change now? We've seen some recent weakness. Here's the tech sector. It has not been the place to be in 2022, but it usually has been the place to be. This is the big growth sector. Are we starting to see some improvement here? Because we're not continuing to see a real breakdown. Semiconductors, which are a big part of the growth, they're also still in a downtrend and still have a lot of repairing that they need to do. But are we starting to see some improvement here? The tech against the SPY, tech has been underperforming as of late, but could that be starting to change? Some other areas, here's growth against bonds, where they both have really sucked in 2022, but it just seems like growth might be starting to come back a little bit, and maybe bonds will be able to come back a little bit. Here's the 10-year yield against tech. Just shows how interest rates have been really outperforming the tech sector. Are we starting to see that change? Ever so slightly. Here's the inverse, the tech sector, which really overperformed in 2019 and into 2020. Well, it's been underperforming. Are we going to see some improvement here? Here's discretionary, the things you like to have, against staples, the things you have to have. Are we starting to see some improvement? And here's just the inverse of that. Staples, are we starting to see this break down slightly? Here's energy against tech, where energy is really starting to show some weakness relative to the tech sector. Gold, which just has really been struggling against the S&P, which has also been struggling for 2022. But is gold really starting to break down now? It's still in an overall uptrend. Here's gold against the dollar. The dollar's been going to the moon. Gold has been going nowhere to down. So that's why this ratio is really dropping. High leverage loans. These are pretty risky. Are we going to see a real breakdown in those? Or in a healthier environment, we would like to see this go up. And here's our intermarket analysis chart. Oil is still up close to 50% going back. And this isn't to the beginning of the year. This is actually a little bit longer than that, where the dollar is then in second place, where gold, stocks, and bonds are now neutral. Looking at some indexes, here's the S&P, here's the mid caps, which I showed earlier, and here are the small caps. Here's the small cap index. It's not really showing a lot of improvement yet. Here are the mid caps, also really not showing much improvement. The Dow coming back up to the pivot point. Can it stay above this pivot point and possibly deal with this moving average? The Nasdaq, it's above the pivot point. Can it get above this 50-period moving average? Same thing with the Nasdaq 100. These are growth plays here. Here's the Wilshire. It's right at the pivot point. Can it break through, or is it going to come back down? There's ARC, which has really struggled since its all-time high. It was up pretty good on Friday. Can it break above this 50-period moving average and start to show some improvement? Here are all stocks within the US and internationally. It doesn't show that they're really breaking down much more. Could they be starting to improve? Here's the emerging markets, which has been in a pretty solid downtrend lately. Here's internationally. China's starting to roll over. Emerging markets are negative, where Europe is still positive, even though it had a pretty rough couple of days there. Japan is pretty much flat to slightly positive, and the US is still slightly positive. So our correlations, here's the S&P to the US dollar, pretty much neutral right now, not really telling us anything. The S&P to oil, they're kind of going in the same direction with each other, where they had been going in opposite directions there for a while. Here's the S&P to the 10-year correlation. They tend to be going in the same direction, which usually, if you see interest rates going up, that has been negative for stocks. Well, if they're both going up here, it shows that they've been going in the same direction. Here's the tech to the 10-year, and the same thing. They have a real high correlation of going in the same direction right now. This is just kind of showing that the market's pretty confused about what's going to happen. The 2-year yield to the S&P, it's neutral right now, not really showing us anything. So all the things that have been positive, yeah, they're showing some weakness. We might see some changes in the near future, but we haven't seen any changes yet. With energy, the CRB, gold, gold, I mean, my goodness. It's positive when compared to the S&P, but in and of itself, gold is still negative. All right, and then those things that are negative, all the different things that I've listed now for, it seems like, all year, and we'll just keep an eye on these things. We might be seeing some changes taking place. It doesn't necessarily mean things are going to shoot up right from here. It just means the dynamics inside the markets could be changing more toward a growth stance, which that's usually where you get your upswings from. All right, so thank you. I hope this was helpful to you. Please feel free to check out the weekly video and the daily videos, and I'll prepare this video again in about a week.